How you doing, folks? Thanks for joining. We're just going to give it a couple of minutes so that we can get everyone who's in the waiting room attending the presentation. So we'll just hold off for a couple of minutes while we get everybody admitted. Thank you so much for attending this afternoon, 5 o'clock, or for all our members in New South Wales and Victoria, 6 o'clock. Really do appreciate you taking time out of your evening to attend this presentation. We do have lots of good information and it is an important topic. So again, we really do thank you for attending tonight. We might just give it another 20 seconds or so. It's a bit of a rush getting through, even though it's a webinar. Excellent. Well, it looks like we do have pretty much everyone who is in the waiting room attending, so we might get started. So good evening, everyone. Thank you for coming to our webinar, where we're going to be discussing the importance of beneficiaries and estate planning. My name is Peter Hoban, and my role at Brighter Super is a member account manager. So a big part of my job is meeting members out on a regular basis, and part of our discussion is the importance of understanding the options for nominating a beneficiary in your accumulation and your pension accounts. It is actually one of our most popular topics at our seminars, and we do hope that at the end of this session, you will have gained a further understanding of beneficiaries and estate planning. Now, at Brighter Super, we do acknowledge the traditional owners of the lands on which we meet today, and we pay our respect to elders past and present. Brighter Super is proud to serve Queensland's 17 Indigenous councils, and we do strive to provide positive outcomes for our members who identify as Aboriginal and Torres Strait Islander. It is also important to understand that the information and the examples contained in this presentation are general in nature, and they have been prepared without taking into account your individual objectives, financial situation, or needs. It is very important that when you're making decisions about your super options, that you obtain the relevant product disclosure statement and target market determination, and you do consider your own personal circumstances. You can access these documents and the financial services guide from the Brighter Super website. Now, today's presentation is going to run for about 30 minutes. We have already had some pre-submitted questions, and we've tried to incorporate those into the presentation. You can also post questions into the question and answer feature during our presentation today, and we'll aim to answer those directly. Now, tonight we also have Yusuf standing by as the moderator. So Yusuf has been with the fund for getting on 9 years now, and he is actually my manager. Yusuf, do you want to come and say good day?
Hi, everybody. Thank you, Pete. Great to be here today. Pete will be the star of the show, and I'll just be behind the scenes. So as Pete mentioned, if you have any questions, I'll be doing my best to answer them behind the scenes. And if I don't get to them straight away, what we'll do is we'll either answer them at the end in the Q&A, or if it's quite specific to your circumstances, we'll take them offline and we'll actually give you a call probably tomorrow and have a bit more of a personal discussion.
Thank you, Yusuf. During the presentation tonight, we're also going to be running some poll questions. So when the question pops up on your screen, please just click on the answer that is appropriate to you. There is no right or wrong answer. It's more for us to gauge what it is that we do need to talk about in our presentations. And also, please don't worry about taking too many notes. We will be sending this recording to you in the next couple of days. So before we move on to the main subject, I would just like to take the opportunity to briefly explain who we are, as we actually have some non-members joining us today. So a few years ago, the merger between LGIA Super and Energy Super, plus the actual acquisition of Suncorp Super, has enabled us to increase our size and scale, yet we do remain committed to investing in the personalised member services that you know and enjoy, such as webinars like this. We actually now serve over 285,000 members, and we have more than 34 billion in funds under management. Last year, we received double-digit returns for the balanced accumulation option and the balanced pension options for that full year 2024. Now, let's talk beneficiaries. Pardon me. Estate planning. So what is estate planning? Well, an estate plan aims to preserve the maximum amount of wealth possible for the intended beneficiaries and ensure that an individual's personal wishes are respected upon passing. Estate planning allows you to be in control of how you would like your estate to be distributed. It helps protect your family and loved ones. It can help you optimize tax upon the transfer of assets in a legal and a logical manner. Most importantly, it ensures that your wishes are followed. You need to remember that your estate typically consists of everything you own, which are your assets, and everything that you owe, which are your liabilities. Superannuation can be one of those assets. It's important to know that superannuation doesn't automatically form part of your estate because super is held within a trust and it's managed by the trustee of your super fund. A death benefit. What is a death benefit? Well, a death benefit is generally the amount of money in your superannuation account plus any insurance that you might have at the time of your death. You can find your death benefit amount in your annual benefit statement, which is available online. Just down the left-hand side, under statements and letters, click on that. You'll see all your annual benefit statements listed. It's important to note that a superannuation death benefit does not automatically form part of your estate, and it's not necessarily paid out as part of a will. If there is no valid binding death nomination on an account, then it's actually up to Brighter Super to determine the distribution of the benefit. And this is subject to the requirements of our trustees' governing rules and the legislative requirements. Generally speaking, it may be that it's the member's dependents or their legal personal representative or estate is the beneficiary. In allocating a superannuation death benefit amongst a member's dependents, consideration is given to those dependents who might reasonably expect to receive a benefit. So your dependents are generally your spouse, a child, someone who's financially dependent on you, or someone that you share what they call an interdependent relationship with. And we're going to discuss these different types of dependents further later in the presentation. Now, as we've mentioned a few times, because it's such an important point, superannuation does not automatically form part of your estate. Brighter Super would generally only pay to the estate if none of those dependents above existed. Where there is no dependent and there is no valid beneficiary nomination, Brighter Super would generally pay a death benefit in accordance with what's called the Superannuation Industry Supervision Act 1993. Bit of a mouthful, also known as the SIS regulations, and with the fund's trust deed. We have recently made improvements to the way that death benefits are paid by amending that trust deed, and it provides clearer guidance and can help speed up the decision when there are cases where we do not hold a valid beneficiary nomination. These changes will help to expedite the claims decision process and minimise delays. Now, you can also review your current nomination by logging onto your member online account. Down that left-hand side where your statements and letters are, just below that, there's a tab there for your beneficiaries. And if you click on that, it does show your current beneficiary nomination. Now, you should review this regularly to ensure that it is up to date and valid. It's especially important to review this if you've had a change in your personal circumstances, for example, a marriage or a relationship breakdown. Your current beneficiary nomination, as we said, is also nominated on your annual benefit statement each year. Now, on this slide, what we're going to do is discuss a binding nomination. A valid binding nomination directs Brighter Super to pay your death benefit to your nominated beneficiary or beneficiaries. A recent improvement that Brighter Super has made is that you can now actually complete a binding non-lapsing nomination online. A non-lapsing option means that you do not need to renew it every 3 years as we used to. I can tell you, folks, if I had $1 for every beneficiary nomination that I'd help someone fill out and witness, I would probably be the one retiring. And having to renew that beneficiary nomination every 3 years was really a bit of a pain for people. The introduction of a non-lapsing binding nomination, a great improvement by Brighter Super. Now, a non-lapsing binding nomination, as its name suggests, does not expire. However, its validity will be assessed at the time of your death. We're going to cover what we mean by validity in the next slide. Now, even though it is a non-lapsing beneficiary nomination, you can change or revoke your nomination at any time. So basically, making a binding nomination puts you in control. If you have more than one beneficiary, you can decide what percentage of the benefit each beneficiary would receive. For example, your partner could receive 50% and your 2 children could receive 25% each. As long as it adds up to 100%, you can pretty much have any split that you like. So in summary, a binding death benefit nomination gives you certainty over where your funds will go. So we're on to our first poll question of today. What we would like to know is, have you nominated a beneficiary? Okay. So most people here, the vast majority, actually do have a beneficiary nomination on file. So that's great. But what's even better is that the person who, or the people actually who don't have a beneficiary nomination on file are actually aware of that. And you will learn how you can rectify that. So a few times I've mentioned that your beneficiary nomination must be valid at the time of your death. Let's have a look at who it actually is that you can nominate as a beneficiary. So superannuation legislation dictates that the following people can receive all or part of a superannuation death benefit. So this is generally the member's dependents and a member's legal personal representative, also known as an LPR or their estate. Under superannuation law, a dependent may include a spouse, so that's either legal or de facto, a child, including adopted children, and an ex-nuptial child, a stepchild, anyone who fits the definition of a child under the Family Law Act. Any person who is in an interdependent relationship with the deceased, and any person who is financially dependent on the deceased member. So an LPR, or legal personal representative, is the executor or executors named in your will or the administrator of your estate. If you nominate your legal personal representative to receive your super benefit, Brighter Super would send the funds to your estate, and then the LPR would distribute the super benefit according to your will. So I think it's pretty clear what the definition is for a spouse or a child, but let's delve a little deeper into who is considered a financial dependent and what is the definition of an interdependent relationship. So let's begin with financial dependent. A financial dependent is someone who is financially dependent on the member at the time of their death. This may include being reliant on the deceased for the payment of bills, rent, shared financial commitments such as a mortgage. Documents proving the financial dependency would need to be provided to Brighter Super at the time of the claim. What about an interdependent relationship? So 2 people are in an interdependent relationship if they have a close personal relationship and they live together, and one or each of them provides the other with financial support, and one or each of them provides the other with domestic support and personal care. Now, it's important to realize that in order to satisfy the criteria for interdependency, all 4 criteria must be met. So an example of this type of relationship would be, say, an elderly brother and sister who live together and support one another in all of those areas above. If 2 individuals share a close personal relationship but don't fulfill the above due to maybe one or both having a physical, intellectual, or psychiatric disability, they are generally still recognized as being in an interdependent relationship. If two individuals share a close relationship, but they don't fulfill the above due to one or more cases, it will need to be, I suppose, looked at a little closer. So what happens if you don't nominate a beneficiary? Well, if there is no valid binding death nomination, then Brighter Super is legally required to determine the distribution of the benefit, as we said, subsequent to the requirements of our governing rules and the legislation. So this is a big one. Is my death benefit taxed? So death benefits are paid tax-free if they're paid to a tax dependent. So this includes a spouse, whether it's married or de facto, a child under the age of 18, including stepchildren, adopted children, ex-nuptial, anyone who fits the definition of a child under the Family Law Act, anyone who was financially dependent on you at the time of your death, or a person who you shared an interdependent relationship with. So just note there the difference between a tax dependent and a dependent. Which one was different? A tax dependent, a child under the age of 18. The common question, probably the most common question that we get around death benefits, is it taxed before it is paid to someone? Well, the answer is it depends who it's paid to. As discussed on that previous slide, if a death benefit is paid to a tax dependent, it is generally paid tax-free. But it can come as a nasty surprise to some people that if it's paid to someone who is not a tax dependent, for example, an adult child who is not financially dependent, it may actually be taxed at up to 17%. Now, how this comes about, in most people's balances, there are two tax components, a tax-free component and a taxable component. The tax-free component has funds that were contributed as an after-tax or a non-concessional contribution. These are funds coming in that have already been taxed at a marginal tax rate or at their normal tax rate. They're not taxed coming into super, they've already been taxed before they come into super. So an example of this is if you receive, say, an inheritance or a sale of an asset and you put that money into super. Now, the tax-free component of your account is paid tax-free to anyone, regardless of whether they're a tax dependent or not. However, most people's superannuation is made up of a taxable component. And the taxable component is made up of employer contributions, salary sacrifice contributions, tax-deductible contributions, and investment earnings. Most of those make up most people's balances. Now, these funds have only been taxed at 15% on their way into the super. That's that concessional tax rate. So essentially, the government's giving you a tax break to help you build your super for retirement by, say, letting you salary sacrifice or charging that concessional tax rate on investment earnings. They're giving you these tax breaks to help you build your super, not to use super as an estate planning tool. So if the benefit is paid to someone who is not considered a tax dependent, the government comes knocking for the tax that you didn't pay when you were making these concessional superannuations into super. This is where that 17% may come in. Now, the taxed and the tax-free components are calculated at the time of payment. The great news for you is, I don't want it to be all doom and gloom. The great news is for you that there are actually potential strategies that our financial advisor team within Brighter Super can help you with as part of your retirement planning advice. A big part of the advice that the planners provide people is how to reduce or eliminate that potential death benefit tax. Let me give you an example, actually, of how the potential tax payable for a non-tax dependent. So on passing, Jamie has a total balance of $500,000, and he wants to leave this behind to his adult child. Now, this is made up of a taxable component of $400,000, the employer contribution, salary sacrifice, investment earnings. Now, the potential tax payable on this amount, 17%, $68,000. This will be deducted and paid to the ATO prior to Jamie's adult child receiving the death benefit. The remaining 100,000 that we can see there is made up of a tax-free component. So that is going to, pass on in entirety. So what is that total death benefit? Well, it's the 500,000 minus the 68,000, 432,000. You can see that the potential tax on death benefits could be a substantial amount. Think about your own balance. In fact, I encourage you to find your own individual taxable and tax-free components on our website, on the Brighter Super website, on the member online. Down that left-hand side, it's about the second or third tab down. There's one there that says benefit quote. If you click on that benefit quote, it will actually show you your personal taxable and tax-free components. Do those sums and see what that 17% may come out to. Now, as I mentioned on the previous slide, if you are concerned about your tax benefit, there are potential strategies for reducing tax on death that our financial advice team can discuss with you. I would wholeheartedly suggest seeking advice that will take your own personal circumstances into account if you're worried about the tax on death benefits. Later in the presentation, I'll give you some information about how you can actually arrange to talk to one of the advisors. Now, we've got our second poll question. Can I ask, how long ago, when did you last check your beneficiary nomination? Okay, so yeah, again, the majority of people have done it within the last 3 years. The other half, if it's for 3 or more years, keeping in mind that we used to have beneficiary nominations that expired after 3 years. If you haven't recently checked your beneficiary nomination, I would definitely be logging on to Member Online and having a look and seeing whether you need to make any changes or renew it, make it a non-lapsing beneficiary nomination. So, different types of death benefit nominations. What we're really going to focus on here are binding nominations, but also what are known as reversionary nominations. Most people are aware of binding nominations, but reversionary nominations you not be aware of. So the following slides are going to go through the types of nominations that bind the trustee to your wishes. So we mentioned earlier that you can now nominate a binding non-lapsing nomination online. This also includes nominating your legal personal representative. Should you prefer to use a paper form? Absolutely. That is still available on our website to download. But without a doubt, the feedback I've been getting from members is that doing it online is so easy, and they're really glad that we've got that there. If you do it on a form, I have to tell you, be really careful, take your time, because if there are any changes, any corrections, you actually need to do a new form. So doing it online, can kind of help eliminate having to do it a couple of times. Now, it's important to note that if you are nominating more than one beneficiary, then the total of all the shares allocated must equal 100%. Please remember to review or update your nomination whenever your personal situation changes. Now, the other option available is a reversionary nomination. So a reversionary beneficiary nomination only applies to members who have a pension account. So a reversionary nomination can be done with the form, or it can be done when you're setting up your pension account, say online. Now, a reversionary beneficiary nomination allows you to have your pension continue to be paid as a pension to your beneficiary, generally the spouse, upon your death. It allows us to keep the funds in the pension account and just change the name of that pension account to the beneficiary. We're not having to close down the pension account, pay it out as an accumulation account, and then the beneficiary has to start a new pension account. We can essentially keep that pension account running and just change the name to the beneficiary. This means that they can also make a lump sum withdrawal or change the pension payments as needed. Now, if the beneficiary is receiving any sort of benefits, there may be social security or maybe even tax implications for the beneficiaries once they become the reversionary beneficiary. I would recommend that if someone becomes a reversionary beneficiary, to again seek financial advice from a brighter super advisor. They can help smooth out what might be a difficult time. I mean, when you think about when do people get advice, change of their circumstances, someone passing away and someone else being the beneficiary, a change in circumstances doesn't get much bigger than that. Now, reversionary nomination is legally binding and it does not lapse, but we do recommend reviewing it regularly to make sure it is still appropriate for your situation. Who you can nominate as a reversionary beneficiary is outlined on the form. It's generally a spouse, or there is an option for children. However, there is an age, a financial, or a disability dependency requirement. Now, I do say refer to the form for all the relevant options. You can also refer to the pension PDS for further guidance. So we've kind of covered those two main types of beneficiary nominations. I want to take the opportunity to ask another one of the poll questions. We're keeping these going during the night. Do you intend to review your beneficiary nomination after this presentation? Well, I'm glad to say that 90% of people say that they're actually going to review it, which is fabulous. The reason that we hold these webinars is to, sort of get people to take action and build their knowledge. So that's an amazing answer. I'd probably say that the 10% of people who aren't going to review it have only just put it on and they're comfortable with how it is. Now, apart from seeking financial advice, we would actually also suggest that you seek independent estate planning advice. Everyone's heard of nightmare stories of what's happened if there's no wills and people squabbling over wills and everything like that. Nightmare. In my job, unfortunately, I hear it all too often. If you have come to some of our in-person seminars, you might recognize Luann Chow from YHC. And she does come along and discuss the importance of wills and estate planning and other things like enduring powers of attorneys. YHC lawyers' details are on screen. And if you are interested in speaking about your situation, you can scan that QR code or contact them for further information. I've personally presented seminars and spent a lot of time with Luann Chow. And wow, she is a gun when it comes to estate planning. So just to round it up, what we want to do is kind of, get those calls to action going. So what makes Brighter Super different to other superannuation funds is our commitment to personal service. We actually have a dedicated team of what they call member account specialists who are here to support you. They actually perform what we call super health checks. So we're either over the phone or online. You can actually have an appointment as part of your membership with someone. And one of the things they do in those super health checks is talk to people about their beneficiary nominations. If you would like to talk to one of our staff on that more one-to-one, we do have the QR code on screen, or you can actually even say, give the contact center a call, send an email request, and someone will actually get in touch to have that super health check with you. In the coming days, alongside today's webinar recording, you'll also receive a link to book a super health check. Fabulous service offering, super health check, part of your membership. Can't recommend it highly enough. So I mentioned also advice, and I am a firm advocate for advice. I do literally hundreds of appointments every day. Hundreds of phone calls, and I see pretty much on a daily basis the benefit that people get from getting qualified personal financial advice. And at Brighter Super, we've actually got a range of advice services. So probably two of the most common questions that members ask me as they get close to retirement is, how much super do I need? And, do I have enough? How long is it going to last? So what we do offer is what's called a retirement health check. So this is where you can actually speak to a financial advisor where they're going to do one of those projections around how much super you might have, how much income you might be able to generate from it. where is it going to come from? Is it going to be from your super, a mix of super and the age pension? Really help you set that baseline for your retirement planning. Once you've had your retirement health check and you're pretty confident that you are going to be able to retire, well, then you can also have a look at receiving what we call scaled or comprehensive financial advice. Comprehensive financial advice, fabulous offering. It takes a complete view of your financial situation and it tailors the advice to suit your individual needs. It's a face-to-face meeting with one of our advice team here in Brisbane. They also get out to different regions across Queensland. In some cases, if you're not able to come into Brisbane or you're really quite remote, appointments can also be arranged via digital channels. Now, for the comprehensive advice, the cost on that does depend on the complexity of the advice, and in most cases, that cost may be able to be deducted from your accumulation account. You don't actually need to make an out-of-pocket payment. Again, I see on a daily basis the benefit that members who have received comprehensive advice get, and it's never too early to start planning for retirement. So if you do want to, start the advice journey, please talk to us to find out how we can help. Now, similar to today's Beneficiaries webinar, our seminar webpage also includes a range of upcoming webinar topics. So keep an eye on this page as we do update it regularly. On the previous two slides, actually, I do just want to ask, we did discuss the range of advice services. So anything from our super health checks, intra-fund advice, those are at no additional cost to our members. Other types of advice like the retirement health check, scale, and comprehensive advice. Something that I am interested to find out, so I've thrown this in as a poll question. After today's webinar, are you planning to get any type of advice, be it a super health check, comprehensive retirement health check? Yeah, fabulous. Wow. That's exactly the answer that we're looking for, because I can tell you, hand on heart, that the difference between a good retirement and a great retirement tends to be advice. It's normally that advice that kicks it up to that next level. Now, I have covered a lot of ground today. You can also visit the resources tab on our website. And if you go to the forms and info sheets page, you'll also be able to find a lot more information. You'll be able to find the different forms we discussed today and those information sheets. As I mentioned, we did try to incorporate all those questions that we received before the webinar into the presentation, but what I might do is get the boss on screen, invite Yusuf to come on and ask any questions that we couldn't actually get to in that Q&A chat. Yusuf, how did you go moderating there?
Great. Thank you very much, Pete. Well done. No questions actually came through. I think that the information that you provided was comprehensive enough, which is great. If when you are reflecting, if you do have some questions, follow-up questions after you're thinking about it, don't hesitate to reach out to us. As Pete said, there's a couple of different ways that you can touch base with us, and we'll be happy to have a conversation with you and book in a health check or one of the advice appointments. And it is worth noting, it was really good to see how much engagement everyone had with the poll question. So thank you very much for that. And it is good to see that clearly the majority felt like there was some benefit from attending today. So thank you very much for that. And thank you very much, Pete. Well done.
Excellent. Thank you. So folks, again, thank you for taking that time to come along and attend this webinar. We really do appreciate it. If you're willing to take time out of your day to learn about superannuation, we're definitely willing to provide you with that information. One last poll question, if I can just please ask, overall, how satisfied were you with this webinar today? Wow, that's great to see. Really, thank you, everyone. Well, thank you very much for attending today's webinar, and I really do hope that we do speak to you soon. Thank you. Take care. Stay safe.